If you're worried about the breakdown in yields, our next guest has 3 high dividend-paying stocks to buy for a breakout. Chris Verone of Strategas Research is at the Plasma to break it down for us. Hey, Chris.
Hey, Scott. Well, first let's talk about what happened today, because I thought it was really interesting. You had yields lower, but the yield groups, utilities, REITs, even gold, did not act that well. So maybe there's some type of a change afoot here in the bond market. I want to look at 10-year yields here just to start. This is over the last several years. Remember, 10s bottomed at 130 back in the summer of 16, and they peaked at 330 in the summer of 2018. That's a 200 basis point move over 2 years. If you cut that move in half, it gets you right to about 230. So a 50% retracement of this entire move is basically where yields trade right now. That's an area of support. We would not be surprised to see yields bounce from here, particularly with sentiment and momentum now oversold. So don't be shocked to see yields rally. I think in that environment, if we want to own yield stocks, they have to be more than just yield payers. This is McDonald's MCD. Good story, good picture. It has spent the better part of the last 6 months in a pretty tight range. We think it breaks up and out of that 170 range on its way to 190. And importantly, MCD outperforming the S&P as well. So good relative trend there. I think Lowe's is another example here. The yield on Lowe's is about 180. So you're getting a pretty competitive yield. The trend has been intact for the better part of the last couple of years. Every single time it finds support, it rallies. Finds support, it rallies. It did that a few weeks ago. What we really like here is in relative terms about to make new relative highs versus the S&P. So we think Lowe's is fine. I think Intel is another story. Yield here about 250. It's coming out of this big base. For what's been a pretty weak last couple days for the semis, Intel's actually held in there okay. I think if you get this back to $50, it's timely. And then on the other side, what do you want to avoid? The stocks that are only yield plays. That's Altria for us. It's rallied right into resistance at the downward sloping 200-day moving average. It has failed here several times in the past. This still looks like a bear market chart to us. We think this one goes lower. So when you put this together, we suspect yields probably bounce here. So if you're going to own yield stocks, focus on things like Microsoft or Intel or Lowe's. That's where the value is.
All right, Chris, come on over to the desk.
No vote. I mean, sometimes what we like to do on this show is we vote.
I don't think Scott needs to be coached on the way things go down here.
And said, look, it's the way it is. Veto. I'm just asking a question. Don't give me the dagger eyes. It's just a question. Chris is here, by the way.
Wow, I mean, the producers were talking to me in my earpiece, not from over here. Okay?
No, I apologize. I got a little ahead of myself there. I'm sorry. I'll be quiet.
Bottom line is just looking for yield is not enough.
I don't think so. I think we've been in an environment where over the last couple of weeks, they just took them from 260 to 230. They're probably oversold here. I thought the last couple of days were telling that you didn't have the yield groups actually act that well. Utilities were a laggard today. REITs were a laggard today. Gold was down. So what does the market already know? I think it's maybe starting to price in, and Tim talks about this, our growth expectations actually maybe starting to bottom here. Are we at the point now where we want to start thinking, what's the next trade? Now, Pete, we talked about this is a very trading environment. I think that speaks to what we've seen here recently.
Well, two of your stocks as well, Intel and Lowe's, are ones that you like.
Yes.
Plays right into what Chris was saying.
Absolutely. And I'm curious, are some of the other names that I mentioned, do they fall into the category as well? The Home Depots of the world and some of these others.
If you think about the whole housing space, the whole home building space, these are stocks that have been getting better for 6 months now. The home builders did not bottom on December 26th with the market. They bottomed way earlier in the fourth quarter. So I think the housing market has already been showing you that something may be getting better in that space. Look at how Lennar acted today. Look at how Pulte and Toll, KBH. That's a good space. We think it's getting better. Lowe's, again, with a 180 yield is an attractive way to play it, too.
Chris, how do you deal with a name like Intel, which didn't really suffer the same fallout as all the rest of the markets did? So, in fact, Intel was very defensive going through December into the downdraft in the market and has been kind of less than spectacular on the way up here. What's your trading view?
I do want to still keep in mind, Intel was down 25% from high to low in the fourth quarter of last year. So it got shaken out with the rest of them. Some of the semis were down 40, so certainly from that context. But it's a stock that actually started to outperform in September, October. It's continued to outperform in a risk-on market over the last 3 months. That just sounds like a leader to me, right? You get this thing back from 52 to 50, it's a pretty good area to add some exposure there.